Want to know a secret that pro traders use to time the market? It's called seasonality. Shh. And it can help you buy stocks and options when prices are low and sell when they're high. In today's video, I'll show you how you can use seasonality to boost your entries and exits with confidence. Hello everyone, I'm Terry M. Lee and welcome to my channel where I help new and growing investors build smarter portfolios and use simple steps, tools, and tutorials. Quick note, I am not a financial advisor. This is all for educational purposes, so always do your due diligence. What is seasonality? Seasonality refers to a pattern in stocks or ETFs performance that tend to repeat at certain times of the year. Think how retail stocks boom during holiday shopping or how energy prices rise in the summer. These patterns can be seen in historical data, monthly, quarterly, and even over multi-year periods. Why does seasonality matters? Seasonality gives an investor a historical edge when deciding entries and exit. It's not perfect, but it does add another layer of confidence that is backed by data. Here's an example on stockcharts.com, a free online resource. This chart shows Microsoft's average monthly returns over the past 4 years. You can see it tends to dip in August and September and December and rise in other months. So this gives us the advantage that we could purchase stocks in September or these lower months. And if we were doing options, we might hold it and take profit in November, assuming we bought it in September. Or maybe we're doing a longer term option trade, be a leap, and we bought it August, September, or either December time frame and held it for 1 to 2 years and take our gains. Additionally, here's a visual of monthly and quarterly returns of Apple and Tesla. We can see in the top left-hand corner, we have Apple's monthly returns. We can see that it goes down in, let's say, May, June, September, November, and December, and then rises in the other months. If we compare that to the quarterly in the top right-hand corner over here, we could say, hey, in the last quarter of the year, this is when we might want to make a purchase of Apple and then hold it all the way to Q3 because it tends to rise during that time frame. And that gives us our overall edge of when it's a better time to make these purchases. Even if you are new, using seasonality can give you a data-backed edge. Instead of guessing when to buy or sell, you have historical tendencies as a guide. It's not perfect, but it's a smart piece of the puzzle. Now, I'm working on a tool where you'll be able to enter your email in up to 25 to 30 tickers. You'll get a personalized seasonality report showing the best times to buy and sell based on historical trends. If you're interested, comment below, I'm interested, and I'll notify you when it's ready. While you wait, sign up for my free newsletter at simplestepinvesting.com to get tools and tips to level up your investing journey delivered in your inbox. Additionally, we're going to be opening up a community soon, so you can sign up there too. Thanks for watching, and be sure to like, comment, and subscribe if you found this helpful. And remember, smarter investing starts with simpler steps.